Good morning, good afternoon, or good evening, depending where you are on the planet. Welcome to today's Bull versus Bear webinar for today, Monday, the 20th of November, 2023. Steve Miley here on the call for trade day. Welcome, everyone. I'm going to go for our usual, normal, regular run through in here today. Calendar, what we've had, what we've got coming up. Take a look at the macro, the geopolitical. Take a look back at last week, recap, run through the themes that have been influencing markets, and then what to expect, not just for today, but we'll take a look at what I like to call the shape of the week for Monday. What are the important factors that are influencing financial markets going into this week? So first of all, I'm going to start in here, getting the reports from off the technical analysis 11 fundamental. Remember, we do have this new live squawk section in here today that you can go to. So looking at the weekly recap, remember is the trade day macro matters gives you a more in-depth look. This is like looking back at last week, recap of everything that was important last week. And then also at the end here, then looking ahead to what we need to watch going into this week. And this is the important bit, which is also, if you don't want to read for all that, I understand completely. If you know what's going on, but if you want to catch up, that's the place to go and do it. Now, in here, we have a look at what we've got, what we had last week as well. We'll run through that shortly, but also, again, replicating down here what we've got coming up for this week. So first of all, last week was all about the inflation data. US CPI beat expectations. That we saw that allow bond markets and stock markets surge higher back on Tuesday of last week. Then after that, Wednesday, PPI and retail sales, we got also bested the numbers. They're the consensus numbers, reinforcing the fact that inflation is slowing, but the economy is still resilient, with retail sales doing well. And it's not just in the US, UK CPI also cooled significantly. And then on the earnings side, we had really positive numbers from Target. We saw help markets higher. Walmart, although they exceeded the estimates, the earnings call was relatively negative, so slightly downbeat for Walmart. On the geopolitical side, we did have that US Sino summit, not particularly eventful from a markets perspective, but mostly positive, although nothing really overly super eventful in here. Military communications at a high level to resume. And then also we had the US Senate last week put through, and as did Biden, the stopgap spending measures, but leaving the path for a long-term agreement uncertain. But at least that gets us through in the short term. So that's what we saw last week. Stock indices continue to surge higher, as you'll probably know. Bond yields continue to go lower, as you probably know. The dollar index and the dollar generally across the FX board continues to weaken. As bond yields go lower, the dollar continues to weaken. Gold futures are doing well on the back of the US dollar weakness, and oil in a bear market now 20% from its peak and looking weak, okay, which is obviously then probably a positive for stocks. So that's what we saw last week. Now, going into this week, important in here, it's US Thanksgiving on Thursday. So we have different hours for both. So financial markets are pretty much closed in the US on Thursday. On the index side, certainly on the stock side and the bond side. So markets, well, pretty much closed across the board on the US side, okay? And they only have a partial day on Friday, so half day on Friday. And equally on the futures side, although futures are partly opened, we are sending out an email on this, okay? But, do check the CME site, okay? No on the product. I'm not going to list, we have, I don't know how many products you can trade at trade day. Something we have between 20 and 40 products you can trade, right? We're not going to list out every single product you can trade in all the different opening times and all the different closing times for Wednesday, Thursday, Friday, okay? But we're going to list in the email we sent out for the indices, which most of you trade, but do double, triple check on the CME website. It's your trading, your account, your evaluations, your funded accounts, whatever it might be, right? It's your responsibility to know when the market's open and when the market's closed. We can't baby you too much, guys, right? So please do be aware that we will send the email out, though, but there are shortened trading hours. The market is closed certainly for part of the session, on Thursday, and markets are also closing early on Friday. So that's something to certainly be aware of. Going into this week, On the central bank side, we've already had the PBOC decision, nothing really significant from that. We get Reserve Bank of Australia minutes overnight, tonight into tomorrow, but the most important thing to watch into Tuesday evening. Now, a day earlier than normal, I think because of the Fed, not because of the Fed. The FOMC meeting minutes are on Tuesday. Usually they're a Wednesday. They're usually 3 weeks after the meeting, okay? They're on a Tuesday coming up this week, okay? So please be aware of that. Remember, the Fed minutes release is one of our tier 1 data. There's only 4 tier 1 data points you have to worry about if you're trading most of the products, okay, outside of energy and agricultural products. And those are the employment report, the CPI report, okay, from the US, and then the Fed meetings and the Fed minutes, okay? Those are the only 4, okay? And we have the Fed minutes coming up, and usually on Tuesday, they're usually on Wednesday. You can't trade 2 minutes before or after. An email, if it hasn't already gone out on that, an email is going out on that today, and it will go out again tomorrow. So please do watch for that, and remember not to trade on Tuesday, okay? So that's the main event we have on the central bank side. On the data side, we're going to run through the table anyway, but key focus is going to be global flash PMI data from S&P Global. So that's the flash PMI. Remember, this is not from ISM, this is from S&P Global. The main US data is from ISM, but they don't give a flash PMI. What is the flash? It's a preliminary number for this month, for November. You will get that on Thursday for most of the major economies, okay? We're going to get it on Thursday. Because the US is closed, we don't get that on Thursday. For the US, we're going to get the flash PMI from S&P Global on Friday. So we get those are the main data points of the week on Thursday and Friday. We also get US durable goods Michigan consumer sentiment on Wednesday. And I've got this wrong actually in here. I've got the August statement, which is like the budget. This is like the budget when the sort of like the budget is set in the UK. It's like a mini budget. The August forecast statement. I got this. I put for Thursday for some reason. That's incorrect. It's actually on Wednesday. So if we actually look at it, we had the PBOC this morning. Nothing really of any shakes there. The RBA tomorrow. Canadian CPI. Some might be interesting to watch that to see if we're cooling as well. US FOMC meeting minutes, that's the main event of the week, okay? Remember, no trading 2 minutes before or after those meeting minutes. Then we get US durable goods, Michigan consumer sentiment on Wednesday. Then it's the US Thanksgiving holiday. Please remember the shortened trading hours. Then we get the flash PMI, the preliminary flash PMI data from S&P Global for most countries, and that UK autumn statement in the wrong place. That should be up on Wednesday. And then Friday, the market is closing early closes for cash markets and for futures markets on Friday. Japanese CPI, German GDP, IFO survey, but we also get that US flash PMI data from S&P Global before the market closes early on Friday. Okay, so that's what we've got coming up. If you want a more in-depth look on you can get all of this. This is in the forums. It's in the just where I was earlier on. You can get these. You can download these here in the fundamental analysis reports here. The macro matters, the more in-depth look at the markets. Okay, looking at my analysis reports, pretty much in here on bonds, we stay bullish across the board. We did reverse back lower back on Friday. You remember we've pointed out this US 2-year, which is get close to this important swing peak in here from early November at 101.226. The market's backed away from there twice. That's going to be really important to watch this week. If we take that out, I think it can allow stocks to go higher. Whilst we're capped below that, I think stocks are going to struggle a little bit to rally in here at the moment. And then keeping an eye, remember, as I've been saying, keeping an eye in here on the resistance levels from all these other bond markets, but I think the US 2-year note really important there. And on the stock indices, we had like really sideways through the end of last week after Tuesday's surging rally. But whilst it's gone sideways in here, you see down here in the bottom half of the chart, the momentum is correcting. So we're correcting whilst going sideways, which is a positive after that surging rally on Tuesday. So plenty of upside still left. Similar for the NASDAQ. I call this high-level consolidation. It's like a flag pattern, basically, right? We had a big push higher on Tuesday, and we're in a flag pattern and here at the moment. Gold remains bullish whilst dollar's on the back foot. And oil, despite a rebound at the end of last week in here, remains in a bigger bear trend for me anyway. Say economic data releases today, nothing really of note in here, right? We've got nothing coming out of the US, nothing really. It's very, very, very quiet. RBA meeting minutes in here coming overnight. Five things to start your day. They're kind of clutching at straws to get anything here. Nothing really is going to impact us from a trading perspective. Open AI, merry-go-round on leadership there. Argentina has a new president. After a runoff election, Elon Musk defending himself, going on accusations of anti-Semitism. This is the main thing. Dollar drops, dollar lower in here. That should be supportive of US stock indices. Dollar continues to be under negative pressure in here. And again, look, pointing out a quiet UK session in here on the way. So not really much to say in here now, guys. We've run through the week. It's obviously a holiday shortened week with Thursdays and Fridays closure and partial closure. Thursday shares sluggish, dollar dips as markets eye Fed rate cuts. I think Fed speakers are going to be critical in here, and there is an article I've got about that in here. Dollar extends decline, US equity futures steady, so European stocks flat. It's all very quiet. Nasdaq futures edging higher. Microsoft up this morning. This is the article. I'm going to put this into the chat. I'm going to have a quick look at this one. Basically, just talking about a few of the Fed members in here kind of not giving their game away, playing the cards. Look, this was from Mary Daly, San Francisco Fed president. We can take our time to do it right, when asked about, they're going to be bringing down, getting inflation right, bringing down rates, or rates going to go higher. And then also we had, so that was from Daly, and then also on the wires we had Boston Fed President Susan Collins. Central bank must be patient and resolute. I wouldn't take additional firming off the table. So they're kind of trying to leave a rate hike on the table, but I think it's going to be really important. Fed watching is going to be really important in the run into the Fed meeting. Now remember, in here, it's still a little ways to go yet, but we do have the blackout period coming up. So the meeting is 12th, 13th, and the blackout starts from the 2nd of December. So we only have this week and then next week of Fed speakers, and this week obviously a partial week with the US holiday. So I don't think we're going to have many Fed speakers on Thursday, Friday with the Thanksgiving holiday. So we've basically got a few days this week, Monday through Wednesday this week, and then next week we're really keeping an eye on those Fed speakers. As I've been saying before, watching out to the hawks to slightly sift a little less hawkish, okay, and that could be a real indication now that it's pretty much nailed on in here anyway. We're not getting any, so there we are at 0 chance, basically nailed on for December unchanged, and now nailed on for January for unchanged. But it's how soon we get the rate cut. The market's pricing in this is May. So this is for a rate cut in here. This from here, this way is a rate cut. This is where rates are now. So we've got like a, 40, 15, nearly a 60% chance here. 60%, exactly a 60% chance in here of a rate cut by May. And then by June, we're going in here, it's only a less than 20% chance that we're going to have rates at where they are now. There's an 80% chance we're going to be lower. But my bet is we're going to get them earlier. And even if we don't get them earlier, I think we're going to see this column rise. This is the one I'm watching for. That's why I'm watching that 2-year note. I said this on Friday. I think there's going to be growing anticipation of an earlier rate cut by the March meeting. It doesn't mean we're going to get one. I don't necessarily think we'll get one, but I think this is going up. I think there's going to be anticipation that we will get one. If there's anticipation, we will get one. If the US 2-year note breaks above that, where is it in here? If it breaks above this level here, 101.226, then all the risk is to the upside for stocks. Okay, so I'm certainly watching that level on the 2-year. I'm watching for increased risk in here of a rate cut in the March meeting. Okay, I'm not going to run through in any kind of detail on the charts. Just to say in here, we're very much in here. We kind of basically just got flag patterns forming on the stock indices, right? So we've just been since CPI, boom, and then sideways flag, right? That's on the NASDAQ, and here we are on the ES, same thing. Boop, boop. That's super high level consolidation considering the explosive move, not only that we had last Tuesday, but also the moves we've had all the way in here from the end of October. So this says to me the market is very resolute, it's very solid. Any kind of excuse to go higher, it will take that excuse to go higher. It's had plenty of opportunity to correct lower and doesn't want to do that. So for me, all the risk into the Thanksgiving and seasonality wise, the days into and after Thanksgiving are usually positive, not always, but usually positive on a seasonal basis. So yeah, I'm looking for us to maybe push up to these levels here going through the middle of the week. So towards towards 4,600 on the ES. And then on the NASDAQ, looking to go up towards these highs over here at 16,200, 250 kind of area going into Wednesday. All right, guys, if there are no questions, I'm going to wrap it up there. I'm going to wish you all a great trading day. I will be on tomorrow, but please do remember about the Fed on Tuesday. And please keep it in your mind already for Thursday and Friday, the different trading hours. Don't get caught holding a position into the close. The close on Thursday is, I can't remember the exact time right now, but we'll put the email out, right? But the close on Thursday, there's 5-6 hours on the day, in the middle of the day when we're not open. On what would be the normal cash market opening time, the market's not open. Okay, so you need to make sure you're out of any positions, make sure you're closed out of any positions. Don't get caught with a position through those times. We don't want you guys to fail. It's unnecessary. It's just a bit of discipline. That's all it takes, right? So, and my strong sentiment would be don't even think about trading in those illiquid markets on Thursday and Friday. Just have, if you're in the US, enjoy your Thanksgiving. If you're not in the US, just enjoy the break from the markets. I would not be playing in the markets, or you have to be very, very careful, know what you're doing. It could be gappy, it could be illiquid, it could be more volatile, and it could just, it could go into a really dull consolidation. You could get trying to catch a breakout, and a breakout never comes because it looks like it's going to break out and it doesn't break out. So just watch out, guys. It's definitely this session, outside of the Christmas, sort of sessions, these two sessions are the quietest trading days of the year. Maybe July the 4th, Independence Day as well. But I mean, it's time to not be in the markets and not getting caught and not donating when you don't need to donate. Don't give a loss. Don't have a couple of significant L's on days that are never going to give you a P, right? So just keep that in mind. All right, enough of the lecture. So please do know those hours. Please remember Tuesday. I'll remind you tomorrow about the Fed minutes. Please remember the different trading hours. We're going to put the emails going out later today on the trading hours. There'll be a reminder later in the week as well. They'll be in the forums. They'll be on Discord. They'll be everywhere, right? But, we can only do so much, and it's up to you guys to have the discipline. All right, guys, take care, stay safe, and I'll be back with you tomorrow.